Te cuento que soy Abra y nuestra entrada en México viene pronto. Y yo voy a contarles el por qué. Pero antes de comenzar, let's talk about taking down some walls. And actually, the Trump joke and so forth, but I think conceptually, what I want to talk to you about today is not only about payments innovation, but how Abra has figured out how to break down many of the walls that have existed in incumbent payment systems. But before we get started, let's do a quick survey. How many of you know the exchange rate today between the US dollar and the Mexican peso? Okay. How many of you know the exchange rate between the Bitcoin and the Mexican peso? Okay, remember that. How many of you have tried to do an online transaction, being from segment A or segment B, having 3 credit cards, and getting a decline from a Mexican bank? How many of you tried to use your Mexican credit card to buy from a US website and not have it go through? Okay, let's understand why that's actually happening. So remember that as we go through. So here we're going to talk about the reality that all of us know about. The world is going mobile, smartphone penetration is going out the wazoo. We know that in Mexico that the smartphone penetration is more or less 60 to 65%, expected to be over the next few years closer to 75 to 80%, despite the fact that a lot of people are using prepaid. What we also know is that despite all of that, people are still consuming data. So smartphone users are consuming data. And the thing that I want you to notice as we go through the presentation today is to also look at the type of the type of apps that they're using. Facebook, Google, WeChat, Twitter, Skype, Facebook Messenger, all of these services are broadly classified as OTT services, meaning services that are actually built on top of the telco infrastructure and actually not provided by the telcos. And in that regard, not by banks either. So this is a slide that I'm sure all of you have seen. It's a bit boring, it's a bit overdone, but I want you to keep something else in mind. Remember this here. Uber doesn't have any inventory, it doesn't have any cars, it's the driver that has to have the license, the driver that has to have the car insurance. Facebook doesn't produce any content. In the case of Spotify, they don't have any licenses. Airbnb doesn't have any hotel inventory, but yet, largest taxi company, largest media company in the grand scheme of things, largest, most valuable retailer doesn't hold any inventory. Airbnb, now larger than any of the largest hotel chains in the world, doesn't own any rooms. And Spotify, one of the world's largest music streaming sites, also doesn't have any rights to music. But yet, when it comes to payments, as the previous speaker said, there's this thing called regulation and there's things called technological architecture that seem to have made it extremely difficult to apply the same logic to payments until Abra. So we can talk about what the telcos have tried to do, and we'll all unfortunately continue to hear the story of how M-Pesa is an example, that we have the example of what Tigo is doing in Central America to try to bring mobile banking or mobile payments or, let's say, mobile money to the masses. But the grand scheme of things is it's been what it should be qualified, if we're all honest with ourselves, as a massive failure. Over 200 mobile money initiatives led by telcos, of which, per my understanding, both Transfer and Telefonica has spent over $100 million each, and they have less than 1 million users in Mexico. So those that are hopeful for trying to promote mobile payments will say, well, look what FSMEX has been able to do. It's able to facilitate P2P transfers in the US, but only the US. Transfer didn't quite work after a substantial investment. PayPal, over 17 years of operating in less than 20 countries with local currency. And Western Union, well, we know what their issue is. And ultimately, in the grand scheme of things, the vast majority of banked innovations, or these payment innovations, are from bank consumers. They are bank-led. So those that remain hopeful say, well, whoa, what's going on in the US and what's going on in Asia actually is an indication of the fact that maybe the device manufacturers have figured out how to do it. We've got Apple Pay, we've got Android Pay, we've got Samsung Pay. But once again, it only really works if you have a bank account. And those of us that live in Mexico, maybe in this audience, and I used to live here as well, we have a bank account. We probably have more than a bank account. But we also have to remember that across the world, 50% of the world does not have a bank account. And in Mexico, that's probably closer to 40% of the population continues to not have a bank account. Which means not only do they not have access to financial services, but they don't have access to what should be broadly qualified as a digital economy. And what we would say is that's actually unfair. It's actually part of a human right to have access to the same digital economy that all of us have access to, whether you're poor, whether you're rich, or whether you're middle income. But yet, the banks are not going to lead the charge. And why is that? Because every single payment system that I just mentioned and every other payments innovation that you would have seen in the world that is trying to facilitate the peer-to-peer movement of payments has that guy in the middle, the famous middleman. Where there's transfer, you have FSMEX that's acting as a middleman, what essentially means is taking your money, holding it on its accounts, and showing you a visual representation of money that is held on its accounts, on its server, but what you have on the phone is nothing more than a visual representation. Western Union, money transfer. Western Union assumes the commitment to transfer money or bring money from the United States into Mexico, which means it is taking custody of the funds. PayPal, same exact thing. One of the primary issues that they had with expanding across multiple countries is the fact that they actually try to keep the money in Luxembourg. And the vast majority of countries in Latin America and the vast majority of countries all over the world don't exactly like the fact that their citizens' money is being held in Luxembourg. And that's why PayPal also doesn't exist in 196 countries. And Citigroup, where I also used to work, 210 years, still cannot operate in more than 50 countries. So what would it look like if we had a single global app that worked in 196 countries? Wouldn't be possible, right? You would think it wouldn't be possible. But we believe it is. So Abra has gone about and built the world's first telco interoperable, mobile phone agnostic, operating system agnostic, device system agnostic, meaning it works in every single smartphone, every single telco operator, every single country, as we expand to those countries, whether you have a bank account or not. And it allows you to send money between any two smartphones in the world for free without requiring a bank account. Now, there's only one way to do that. Technologically speaking, there is only one way to do that. And that is by using digital currency. But as I asked you at the beginning, all of you knew the exchange rate between the Mexican peso and the US dollar, but only a couple of us actually knew the exchange rate between the Mexican peso and the Bitcoin. And there's a reason for that. It's because we were brought up learning one currency, and every single payment innovation has always been designed to allow you to continue to operate in that currency. But yet, Bitcoin, to a certain degree, has asked you to learn a new currency. And until we actually change the education system across 196 countries, I don't think that Bitcoin has much of a chance to become a technology for mass consumer adoption. However, what if you made it abstract? What if you entirely removed the notion of the blockchain technology and allowed people to hold the currency in their native currency? Mexican pesos, US dollars, euros. Well, the only way to do that is doing what we did with the web. So, leading up until 1995, you had this thing that continues to exist, although those of us that are younger, and I'm sort of in between right now, wouldn't necessarily know that used to be a system called, well, continues to be a system called TCP/IP. TCP/IP is the internet protocol that allows computers to talk with each other and allows information to be shared amongst each other, AKA it's the internet. But yet, it didn't make a lot of sense except for military institutions and academic institutions until 1995 when something was started called Netscape that made a user-friendly application on top of an internet protocol, on top of a computer protocol, and brought it to the masses. So that's what Abra's done with a blockchain. We've completely removed the volatility of the underlying currency of the Bitcoin, meaning independent of whether the Bitcoin goes up or goes down, you continue to hold 100 pesos, 200 pesos, whatever amount that you actually put onto the phone, and built the world's first smartphone to smartphone, send money to any smartphone in the world for free application. So, Abra allows you to send money between any two smartphones in the world in your native currency. So this is shown in US dollars. Obviously, when we come to Mexico, we'll be supporting both US dollars and Mexican pesos, and ultimately any other currency that anyone wants to hold here in the country. Allows you to send money between any two smartphones for free. Yes, for free. In any amount, whether it's $1, $2, with transaction limits, of course, imposed by regulation. And uses what Abra calls the teller network, which allows you to find a cash-in, cash-out location, which ultimately could be one of two things. Convenience store chains, pawn shops, supermarkets, and ideally, as well, every single mom-and-pop store in Mexico that desires to buy and sell digital currency and facilitate the ability of people that currently have to travel 10 kilometers into a small village to pick up a $100 remittance, to do so 5 minutes from their house. So this is what it looks like. We're already operating in the Philippines and the US, but yes, what about the skeptics? So we'll say, what about KYC? What about money laundering? This is never gonna work. These crazy Americans, here they come again. Trust me, we figured it out. So if we go back to this example before, we see something that's quite common in all of these. Every single one of these businesses is what is qualified as a platform business, or what is qualified as a shared economy business, where they are the providers of a platform that enable people to buy and sell or to transact with each other without actually being party to the transaction. And people say, well, that works when it's content, that works when it's a taxi driver, but how could that work in payments? So without giving away my secret, I'll say that there's actually two presidents in the market. The two largest, most valuable payments companies in the world, in one case 5 times the valuation of PayPal, never touches, manages, or takes custody of anyone's funds. That's Visa. $250 billion company that never touches anyone's money. Now what they're doing through their distribution is connecting banks. But what if every single smartphone in the world was a bank? And what if the money was stored directly on the phone? Don't you think distribution would happen a lot faster? And that's what Abra's doing. So, some final words for those of you that are in the audience that are a little bit concerned and say this is never going to be possible. I'll just say a small public service announcement about the fintech-enabled world and particularly digital currency. So first of all, it's important to remember that the biggest and most valuable breakthrough innovation that digital currency provides, which will allow financial inclusion to actually work, is the notion of value being stored and moved without custody. When you no longer need a bank to hold your money, but you're able to transact digitally, that is what is going to lead to financial inclusion. The second is, while we obviously support clarity and regulation, we also want to make a very clear message known. The vast majority of the regulatory framework is already in place. We do not need to reinvent the wheel. We just need to expand certain definitions to include new technologies, because most of the regulation is already written. And the last one is, banks will be disintermediated. banks will be left out of the equation. And that's okay, because for the past 30 years, bank-led financial inclusion has failed. And we owe it to society, and we owe it to ourselves to look for solutions that extend beyond the existing framework of big bank-led innovation and look for other solutions that still work within the existing regulatory framework. So the world is being turned upside down, and Abra will be coming to Mexico. I have a colleague somewhere in the audience from my Miami office, and if you would like to talk to us, feel free to come up after the presentation. Thank you very much.